Talking about weather, I did say it was a big deal. So let's talk about the cattle sector, because weather has been quite a bit of a negative for the cattle sector over the last few years. Yeah. And so what could we expect overall in the cattle sector for 25?
As an economist, one of the things I love to do is look back and see how accurate we were in our forecasts. So I actually reflected back last year on our outlook, and the message there was record high cattle prices were going to last through 25 and likely into 2026. And you know what? The story is very similar today.
Thanks for pointing out we were right.
Yeah, I have to do that. So, and so we're still seeing those strong fundamentals in the cattle market. So as you can see on the screen here, one of the reasons why is we're seeing those inventory levels come down, even despite strong prices. So our forecast is that prices overall, so this is an average of fed and feeder prices, are going to still continue to trend higher this year. And despite that, we're still seeing inventory levels low. This is a 30-year low of the cattle inventory in Canada, and it's for heifers an all-time low. So we're not seeing those heifers being retained to rebuild the herds. So this is something we're mindful of, and this is supporting prices. The other thing that it's not shown here, but over that same time frame, the number of farms has actually decreased as well. So we've seen a significant increase in the number of cattle farms. So whether these farms exited the industry and producers retired, or did they switch production practices? So maybe they went to switch to crops. So the story there is it may not be that easy to actually rebuild the herd given the number of farms and the assets they have or the land base. So we're watching that.
Absolutely. And I think of expansion, and I think part of the issue, if I'm not mistaken, is that with strong profitability, high returns makes it expensive as well from an option cost, so to speak, to actually build the herd back, right? Yeah. And so what can we expect? Like any signs that we're looking at a rebuild anytime soon, or?
Yeah, so the one thing I want to point out, so if we just go back to one chart on the slaughter ratio. So you'll see on the screen shortly that the number of cows and heifers that are sent to slaughter is still really high. And so that's an indication that the herd is not being rebuilt. They're not retaining those heifers. If you look at this figure, one thing to really point out is the magic number is about 47%. So if the slaughter ratio is higher than that, it means there's likely not the animals being retained to rebuild the herd. And so we've been above that for a number of years. So kind of watch that 47% is that magic number. If we get below that, we could see maybe rebuilding, but at least the cattle herd would stay stable. So your question about rebuilding, it's going to take multiple years. It's not going to be a quick process. We need good weather. You mentioned the weather. We need the strong, good pasture conditions and feed availability. And producers are still recovering from previous years of drought, especially in the West, where they did have a couple of years of drought where they had to import a lot of feed that added a lot of cost to their operation.
Let's talk about trade real quick. Yeah. I mean, it's a big deal, right? Exposure to the U.S. market when you think of the cattle sector, and it's not the only sector, but 17%, if I'm not mistaken, of cattle production goes to the U.S. We export beef, and as a big part of our exports or production of beef that actually goes to the United States, about 40%, if I'm not mistaken. So bottom line is, we got lots of exposure, and tariffs are not the only thing that matters. I think we are also kind of monitoring what country of origin or voluntary country of origin labeling could look like for the cattle producers.
Yeah, so for sure. So in the absence of tariffs and in the absence of V-Cool that's coming in, if we look at the profitability right now, our forecast is things are looking good. So cow-calf are going to be profitable this year with those strong feeder cattle prices. And feedlots, they're still going to be profitable. What we've noticed is actually there's a bit of a convergence between the fed and feeder cattle prices. So that's squeezing margins a little bit for feedlots. And so that's something, where we're at now. V-Cool, so, that's going to potentially reduce the price producers receive in Canada. So you'll see on the screen here, if we look back over time, we can see what happened historically. So you can see with BSE early in the 2000s, that really reduced the price that Canadian producers received. M-Cool, which is the mandatory country of origin labeling that Canada was dealt with kind of in 2009 to 2015. You can see there as well, there was a price discount paid to Canadian producers. So with V-Cool coming in next year, if it's adopted widely, you could see these basis levels widening and see that reduced price for Canadian cattle.
Yeah, and I think the message here, the important message is any type of trade disruption kind of introduces a little bit more of a difference between the U.S. price and the Canadian price. So it's not just about lifting costs of buyers in the U.S. with a tariff, but it's also potentially lowering the price that Canadian producers face. So that's definitely one thing to monitor in 2025.